So the title of this video is going to be why you should buy silver or gold, but I'm telling you silver's better because of the historical ratio of 16 ounces of silver buying 1 ounce of gold. That has been that way approximately, anyways, for thousands of years, up until fairly recent history. It now will, the ratio is probably like 60 or 70 to 1 or something like that. So at today's stock market prices, gold, for example, was the high of today was right around $1,225 an ounce for gold. Silver, 19 bucks. The high was $19.50. So if that was a 12 to 1 ratio and there's $1,225, that's the perfect number. That would be, easy math, 100 bucks roughly for silver. That means well, that's a 12 to 1 ratio. I'm sorry. That has been one of the ratios, by the way. 16 to 1 ratio is actually going to be around, say, 80 bucks or whatever. Silver should be $80 an ounce right now, just for historical data purposes only, thousands of years of history. That's one reason why you need to get silver now, because it will be going back to that historic ratio, and probably better when people figure out they can't get their hands on gold because there ain't none left, and they run to silver only to find out that there's even less silver out there because they haven't been producing it like they used to because it's been demonetized. Anyways, I want to show you why you should be buying silver or gold, but let's stay with silver because silver is going to outperform gold. The same thing I'm going to tell you really applies to both, so it doesn't matter. Let's look at some average things you would have in your 401k, some average stocks, investments in your 401k that your company would invest for you. And by the way, Fidelity is one of the fairly well-known companies that deals with 401ks, and they have their own little basket of things they invest in and whatnot. So I pulled 4 of their, right off their website, random ones that are pretty much average. Just whatever. I could probably pick any of them. It's not going to matter. But anyways, I picked, I think, 4. And I want to show you, here's one of them. And we're going to look at year-to-date performance, 2.56%. 1 year, 18.26%. And as you can see, that's pretty much from here to here. This little increase right here. That's where we're at today. That's probably the 18% that you're seeing over here. So 5 years, in other words, if you had this thing for 5 years straight, you would only be getting a return on about 4%. That's what you'd be making, 4% on your money. 10 years would be 3.30%. 3.30%. Okay, let's move on to another one. Same company, different bundle of crap they're investing in. Well, this one is crap. However, the life of it's actually not bad compared to the other one anyways, but let's look at this. 1 year, 0.24%. Year to date, 0%. 5 year, 3.13%. 10 year, 2.82%. Okay? So that's your 401k there working for you for the most part. So let's go to the third one. Here's another one. Now this is my favorite. 44% 1 year. And here we go to this chart over here. And you can see it move up. From the beginning of 09, it was down here right around $6,000, $5,500 or so, let's say. It's almost up to 10. It's around 9,500, whatever the hell this is. So there's your 44% gain. So anyone in their right mind would say, oh, shoot, I want to keep this one. Matter of fact, instead of only putting 25% in or 50% in and mixing it, I want to put all 75% or 100% of my 401k on this. Oh, this is great. 44% increase. Wow, that's great. I'm making all kinds of money. But the 3 year, if you had your money in here for 3 years, it's only up 1.17%. 5 years, average, whatever, 7.82%. Not that bad. 10 years, minus 0.67. What's that about, right? And then, of course, it says the life of the whole thing is average, I guess, is 12.27%, which is all of these averaged. So average speaking, of course, if you cashed out last year or the year before that, you can forget this 12%. You ain't cashing out crap. You're getting garbage back. But if you kept it in there for this year so far, it skyrocketed just this year alone, as you can see over here. Having said that, 10 years, because we're going to be looking at 10 years, by the way. That's a significant amount of time. Life of this thing, whatever, 12%. Okay, next one, and this will be the final one that I want to show you. And this is gold and silver. Specifically, I picked up the silver chart. This is from the year 2001 to the year 2010. Exactly like we were just looking at those 10-year charts. This is a 10-year chart. And this is every single year we have here. Actually, it's by the month, by the way. But we're at $4.50 low here for silver. Down here, we're almost at $4.40. A few months later, whatever, down to $4.30. It fluctuates up and down, obviously, like anything. Not much. But anyways, we're down almost to $4.05, $4.15. For the sake of argument, we're going to round this down to $4 an ounce, because I can show you soon here that it actually does dip to 4, as you can see. But I don't want to sit here and spend all this time on every single monthly chart. So we're at $4 in 2001 for silver. 1 ounce of silver, $4. Let's go on down. We're still in the higher fours. 5, 6, 7, 6, 7, 6, 7. We're in the 6, 7 range. $10 range. And by the way, we are in March of 2006, right? $10 just 4 years ago. Okay. That's from $4, that's more than a 100% increase had you invested in silver. Remember those other charts I showed you? The best one, which just took off over the last few months, one little tiny one of those little stock bundles they had, was only 44%, which in normal terms is like, wow, what a fantastic investment. I just showed you silver is now more than doubled. It's $10, $10.50, whatever. We're up to 11, almost $12 over here. Over here we hit $14 high, $14.50 high. Again, 2006. So let's round that off again. Whatever, we'll just leave it at $14. Doesn't matter. It started off at 4. 4 times 3 is $12. That's a 300% increase. 300, not 30, not 44, not 1 or 2 or 3%. 300+% increase if you invested in freaking silver. Now, anyways, let's go on down to the bottom here where we are in today's world. And this is May of 2010, as you can see. May of 2010, we are at beginning of May 1875, down to 17, almost 1750, blah, blah, blah. Back up to 1850 today, and this is where this stops. But by the way, today, as the market closed, it was at 1950 high today, which is May 11th, 2010. So, if it was 1950 closing today, again, let's be nice and round that off for easy math. Let's say it's $20. Again, it was $4 several years ago, 10 years ago, and as a matter of fact, it stayed $4 till I think 2003 and then started going up slightly into 2004. So actually 7 years ago, you could have invested in silver when it was $4 and you didn't have to wait 10 years. But bottom line, $4 an ounce. How many 4s are in 20? There's 5 of those 4s. 500% increase in your money investment in silver. 500% increase. If you had $100,000, let's say, which probably no one listening to this does, but whatever, times 500%, that's a lot of money. That's no little 4 or 5% return you're going to get leaving it in some bond or some bull crap that, you got to wait a whole year to get back. And, here's, your $100,000 investment made you $2,000 for the year. Ooh, I could live off of that, right? No. $2,000 profit for a year? I don't think so. But if that was silver and you waited a few years and you averaged out, well, what does it all equal? Because it's not like you're going to be cashing out your silver every single year. You're going to hang on to it until prices explode like this. And by the way, you haven't seen nothing. Bottom line, I just showed you a 500% increase in profit. And when you go to sell your silver, you don't pay taxes. The IRS does not know about it. You go get a check from the coin dealer who buys it from you. You go to his bank, cash the check, and you walk out with cash money. No one knows about it. No early fees, no income tax fees, nothing.